In the previous chapter, we had looked into the introduction to the direct taxes. Now we are in lesson number 2, where we will look into the basic concepts of income tax. So here we will look at the various sources for income tax like finance bill, then we look at the various definitions, very important definitions, that is in person, assessee, assessment year, previous year, income, capital and revenue receipts. See, without the understanding of all these basic terms, it would be difficult to understand the direct tax syllabus as such. So this chapter is important from that point of view, and now that it is objective, there are chances that they will ask lots of questions from this chapter. So then we have residential status, which is very important as to how we decide whether a person is a resident or a non-resident, or different classes within those two categories. And then we have status of companies as well, whether a company or any other entity apart from individual assessee, how to treat them as a resident or non-resident. So these are the things which we look into in this chapter called the basic concept of income taxes. So now, what are the main sources for direct taxes? Of course, every year the government presents the budget, so through the Finance Act, so that itself is the source when it comes to the rates, and that is the slab rates for the income tax for that particular year. Then we have the income tax rules. Income tax rules is nothing but the procedural aspects which needs to be followed with regard to the Income Tax Act itself. Then we have various notifications released by the Central Board of Direct Taxes for the proper administration. When we say proper administration, it is basically for the smooth flow of the work, both for the department as well as for the assessees. Various circulars. These circulars kind of acts as a clarification if there are any doubts regarding the scope or the meaning of the provisions. So we can think of those circulars as guidance notes. So of course, what is most important here is these circulars are binding on the department only, not on the assessee. That means if the assessee thinks that the circular is against the assessee, against the interest of the assessee can safely ignore it. Then we have judicial decisions. Judicial decisions pronounced by Supreme Court, that means the highest court in India. So if there are any such decisions, that will be binding on all the other courts in the country. So, but whereas when it comes to decision of high courts, so it will be binding only in that particular state. For instance, if there is a high court ruling in Bangalore, the same might not be applicable for the Madras High Court. So that is there. So now let us look into all these in detail. So now let us look into the finance bill part. So bill refers to the proposals which is not yet approved by the parliament. So before it is approved, it is only in the stage of state of bill. Once it gets approved by the parliament, both the houses of parliament, and gets the assent of the president, it becomes the Finance Act. So now who will present the finance bill? It will be presented by the finance minister. If you have noticed, it was presented by Ms. Nirmala Sitharaman recently. And then there will be recommendations or suggestions considered and changes made to the finance bill. So now it will be made by the parliament. Once it is presented, it will be up for debate. So it will be debated upon, and if there are any changes which can be incorporated, such changes will be incorporated. And then once the parliament approves, it will be sent to president. And if the president gives his assent thereto, then it becomes the Finance Act. Now, of course, they have given the URL where you can check the finance bills for the various years. Not very important for us. Let us look at the things which are relevant for us. So the amendments made with respect to direct tax and indirect taxes in the finance bill. So in this case, we are looking into the amendments made to the finance bill with respect to the direct and the indirect taxes. So when are the amendments applicable when it comes to direct taxes? Usually once the notification is published in the official gazette. So direct taxes can wait. So only upon notification in the official gazette will say this particular amendment has been brought into effect. Whereas when it comes to the indirect taxes, it is usually the midnight of the date of presentation of the bill. If the bill is presented on, let's say, 31st of July, evening. So from that midnight itself, that means from 1st of August itself, the indirect tax proposals will come into effect. So there is no intervening period when it comes to indirect taxes, because once the proposal is made, it will be immediately applicable. Now let us look at the basic concepts of income tax, like which are the things which generally affect the tax provisions and tax implications. So first is of course the Income Tax Act 1961. Then we looked at the rules 1962, that is the procedural aspects. Then we have relevant Finance Act, mostly for the amendments if there are any, and also most importantly for the tax rates. Then we have notifications, circulars and clarifications issued by the CBT. We know that these are all binding only on the department and not on the assessees. Then we have judicial pronouncements. First will be Supreme Court, then next High Court, then the various lower courts. This is what is most important, the Supreme Court pronouncements. Now let us look at the steps which we need to follow to calculate the tax liability. The first thing which we need to do is determine the category of the person as to whether it is an individual, company, or partnership, firm, trust, HUF, etc. Once we determine the category of the person, then we look at the residential status. So what is the residential status? Nothing but whether the person is resident or non-resident. So we will see in detail in a while as to what do you mean by resident and non-resident. So that is the second step, because the next step, that is the computation of total income, depends on the residential status. So certain incomes are considered as income based on the residential status. So that is the next step, where we look at the 5 heads of income and compute the total income of the person. Finally, once we are done with the above 3 steps, we calculate the tax liability, that is the amount of tax payable by the person. So these are the 4 steps which you need to keep in mind while calculating the tax liability of any person. Once again, to quickly revise, the first step is determination. The second step is determination of residential status. Third step is calculation of total income, and lastly the calculation of tax liability. So now let us look at the first step in detail, that is determining the category of a person. We said person, but we did not say what exactly do we mean by person. We will now see what is the definition of person. Let us read this section 2, subsection 31. It says person includes. So this word is very important. So here when we say includes, it is an inclusive definition. It is not an exhaustive definition wherein we can say A, B, C, D refers to person. No, it is not like that. In this case, they say it includes. It may include other things as well in future. We'll see how. So first, of course, individual. Then comes the Hindu undivided family, largely invoked these days. Then companies, private limited, public limited, one person, etc. Then we have firms, AOP, that is association of persons, BOI, body of individuals, local authorities like for instance Mysore City Corporation, that is a local authority. So that also comes under the definition of person. Then they say every artificial juridical person not covered here, that is not covered above. So if there is any other category which can be classified as person, even that will be categorized as person. For instance, when the Income Tax Act was brought out in 1961, we definitely did not have LLPs. Now, the definition does not include LLP. So therefore, what we will do is we will include LLP under this last clause, that is every artificial juridical person not covered above. So individual. Now who is an individual? Individual is a natural human being, that is male, female, minor, or a person of sound or unsound mind. This is very quite obvious. We know who is an individual. Then comes HUF. As I said earlier, not very famous these days, but still we have this status as part of the act, so we will cover this. It consists of all person lineally descendant. So in this case, lineally descendant means, let's say there is a grandfather, then he has a son, then his son, grandson, then his son, great grandson. So they are lineally descendant. from a common ancestor. Who is a common ancestor? Let's say this grandfather A, and includes their wives and unmarried daughters, and also a stranger who has been adopted by a family. So as now the exam type has been changed to objective type, MCQs, these type of definitions might be very important, because you never know what kind of questions the institute might ask. So they might ask something related to whether a stranger is part of the HUF or not. Now that the institute has changed the scheme of examination to objective type, so you should be careful about definitions like this, because they never know, you never know what they might ask. So they might ask the definition based on this particular point, that is stranger, whether a stranger is part of the HUF or not. So stranger will be a part of HUF, though he is not linearly descended from any of the ancestors. So here what we are worried about is common ancestor and their wives, and includes a stranger. So here there are two schools in this, two different types of HUF. One is Mitakshara, the other one being Dayabhaga. So what we have to remember is Dayabhaga is applicable only in West Bengal and Assam. Elsewhere, only the Mitakshara school of HUF is applicable. Just remember this much: Mitakshara applicable everywhere except for West Bengal and Assam. Dayabhaga only in West Bengal and Assam. Now let us move on to the next category, that is company. So it includes a domestic company, they say. Basically what we have to remember is any Indian company that is set up in India, or any body corporate, in other words it's again a company, by or under the laws of a country outside of India, that is a foreign company. So these type of companies also come under the definition of company. Any institution, association or body which is or was assessable or was assessed as a company for any assessment year under the Income Tax Act 1922. That means even before this 1961 Act was set up, if there was any other company which came under the Income Tax Act 1922 as a company, even that would be considered as a company, especially the old companies established before independence. Any institution, association or body, whether incorporated or not, and whether Indian or non-Indian, whether incorporated or not, whether Indian or non-Indian, which is declared by general or special order of the board to be a company. That means even though it is not incorporated, whether it is Indian or non-Indian, as long as it is declared by special order of the board to be a company, then that will also be considered as company. Basically what we have to remember is we have only broadly two categories: Indian company and foreign company. So those two categories of companies also come under the definition of person. Next, firm. Firm, as we know, is nothing but a partnership firm, whether registered or not. So some firms are registered, some are not. Both come under the definition of person. So irrespective of the registration, they will be included as assessees or persons under the Income Tax Act, and shall include limited liability partnership as defined by the LLP Act 2008. That means this wasn't there earlier. Now they have included LLPs as well. So according to section 4 of the Partnership Act 1932, persons who have entered into partnership one another are individually called partners and collectively a firm. This is nothing but the definition of the firm. So what you have to remember is firm, including LLP, also comes under the definition of person. Association of persons. The word person here is very important. Two or more persons join in for a common purpose or common action to produce income, profits or gains. See, it's very clearly mentioned that it is two or more persons. Again, once again, as we just now saw, persons could be anyone, not necessarily individuals. They could be HUF, company, firms or anyone else, as long as they come under the definition of person. And here the object is also very important, that is to produce some income. It is not enough that they simply come together and receive the money. They should have objective of, let's say, profit motive. There should be some profit motive or some income motive. Unless we have such motive, we cannot call them as association of persons. Then we have something which is very similar to association of persons, body of individuals. But again, the word individuals here is very important because it is only restricted to individuals. So it cannot involve anyone else. So only individuals can be members, individuals can join together for a common purpose. So now that we have looked into both AOP and BOA, that is association of persons as well as body of individuals, Is there any difference between the two? The difference here lies in the definition itself. In case of association, it implies a voluntary getting together for a definite purpose, as we saw above. Whereas in case of body of individuals, it would be just a body without any intention to get together, but it should be body of individuals. Whereas in case of AOP, it could be anyone, including artificial juridical person. Then comes the local authority. Once again, even this is included, as we saw earlier, corporations like MCC or BBMP. So all these come under the category of local authority. And every artificial juridical person not falling within any of the above categories. Let's say there is a new type of person which is incorporated or which comes into existence due to some new act. Even that will be considered as a person under this clause. That is, every artificial juridical person not falling within any of the above categories. Now let us move on to the next section, that is assessee. Section 2, subsection 7. In ordinary language, a taxpayer is an assessee. He may be the person of any of the above categories, that is the ones which we just now discussed. But according to section 2(7) of the Income Tax Act 1961, assessee is a person by whom any tax or any other sum of money is payable under the Income Tax Act. So once again, who is an assessee? Who pays any tax or any other sum of money. So that means as long as you pay some amount of tax or some money in whichever format it is, you will be considered as an assessee according to section 2(7). So it is very clearly mentioned that it includes every person in respect of whom any proceeding under the income tax has been initiated. So even if you haven't paid tax, and if some proceeding has been initiated towards your income or fringe benefits, the benefits which you get out of your employment, the income of any other person in respect of which he is assessable. That means, let's say one Mr. A is a non-resident, and he has entrusted the responsibility of his tax payment to Mr. B. So Mr. B is in charge of Mr. A's income tax responsibilities. Now Mr. B will be considered as an assessee. So since Mr. A is non-accessible or he is not here, B will become the assessee here because he is liable with respect to Mr. A. And the loss sustained by him or any such person, the amount of refund due or any other person. That means proceedings should be initiated towards the loss sustained by him. If the income tax department has any doubts regarding the loss which he has reported, even then they might initiate proceedings. Then the amount of refund due to him or to any other person. So if there is any proceeding with regard to the refund due, let's say there is an assessee who has claimed huge amounts of refund, and if the income tax department suspects such return, then they might initiate proceedings. In all these cases, even though you haven't paid tax, or even if you have paid tax, then anyway you will become the assessee. But if you haven't paid tax, then by these circumstances you will be considered as an assessee. And who is deemed to be an assessee under any provision of the Income Tax Act. As long as some provision of the income tax says you are an assessee, you will be considered as an assessee. Who is deemed to be an assessee in default under any provision of income tax. That means you are supposed to do something but you haven't done something. So in such cases you will be under default, and then also you will be considered as an assessee. Accordingly, assessee is a person by whom tax or any other sum is payable under the Act. What is this any other sum now? They say it could be other sum of money as well. So the any other sum or other sum of money part refers to any fine payable, any interest payable, if there is any penalty other than tax payable by the assessee. So even in such circumstances, the person would be treated as an assessee. Person to whom any refund of tax is due under the Act. That means your tax liability was only 10k and you paid 11k. In this case, 1k is the refund which is due to you. Even then you become the assessee. Next, if any proceeding under the Act has been taken against any person, proceeding under the Act, that means it will be initiated by the Income Tax Department. He is also an assessee. So it should be initiated on the provisions of this act, that means Income Tax Act. In other words, a single inquiry letter issued by the Income Tax Department, if they are not referencing any specific provision, then it is not any proceeding. For example, let's say they will ask you to file the return of income. File the return. Last year you had filed, this year you haven't filed, return. File the return. In this case, if they quote any section like 139, then that will be considered as proceeding, because there is a reference to a specific provision of the act. If there is no reference to any specific provision and simply there is an inquiry letter sent to the person, then he or she will not be the assessee. Now that we have looked into the assessee part of the definition, let us next move on to the assessment year.